All right. How's everybody doing? How's everyone's Tuesday going here so far? Hello, hello. Hey, Kath, good evening to you as well. Adrian, Coley. It's been a long day for sure, but we got lots to go here still. Excited. Quantum Holistics, nice name. Realty City Live, welcome. Shirley, how you doing? Beautiful. So yeah, good evening, everybody. Welcome to coaching session here, number 9. These are still going to be something that continues here going forward, so don't see any reason why these are going to stop. Excited, I think by this format, I think that's been pretty helpful. So yeah, really looking forward to what today has in store, and yeah, we can kind of keep going from there. Like we mentioned in the members chat here today, one-on-one calls are back on the menu. But I think a lot of these kind of group calls, they should answer a lot of questions, give a lot of good feedback, hopefully, and kind of solve those gaps in between those opportunities. So today, kind of have a couple, or I guess one topic in mind prior to opening up the floor, or seeing if this creates any kind of questions for people. But the topic I wanted to cover here today is kind of drawdown management, right? So how do we handle losing streaks? How do we handle, red days, a series of red days, a series of red trades, and just kind of how to manage expectations. From there, right, kind of understanding the relationship between profitability and variance, and kind of the difference between, let's say, market, human, and just sheer bad luck. So, kind of as a starting point here, right, there's always going to be times where you're going to have a significant amount of losing. There's just no way around it, right? Every trader loses, and every trader loses more than they like to put on, right? To a certain extent. So like the social media profiles you see with 90% win rates and green every day and all this sort of stuff, not the reality, right? That's a fugazi approach to what trading is like. And with that, right, there's a tremendous amount of mathematical probability that basically just defines or sets the expectation that you will have losing streaks, that you will have periods of quote unquote bad form, and that's just a part of what trading is. The unfortunate reality is that I think you build a lot of confidence as a trader by surviving these periods of drawdown, fixing a mistake or fixing a technical issue or whatever it might be, and then bringing your portfolio to all-time highs. That period, right? Either that like micro period, or sometimes it's gonna be a month, 2 months, a quarter, right? However long it takes. That's kind of where you build the like I can do anything type of mindset that can be really important when it comes down to trading on a daily basis, right? So seeing our trading improve over a like longer term time span should also mean, right, that I'm judging myself and my P&L on a longer term time span again, right? So I'm not looking to judge myself on a P&L basis from day to day, right, or trade to trade. Not even really a week to week. I want to be looking at those longer periods, right? So did I trade well this month? Did I trade well this quarter, right? Did I trade well this year? Basically elongating what my goal period is so that I can smooth out that variance curve in between and hopefully create a smooth and call it toxic free mental framework, right? That I can always stay within. So it's almost like you gotta have to trick yourself into expecting that the worst is going to happen. What I guess to build off of that, right? If I expect myself, or if I judge myself on a, month to month, quarter to quarter, year to year type scale, then I'm going to get off, or I'm going to make the roller coaster a lot more gentle, right? Where each day doesn't have to be I don't know, memorandum or like a documentary on what my trading is. It can just be a single data point in what is a long period of reflection. So just starting this discussion fundamentally with that, right? It's a mindset approach first that allows you to build out that solid foundation. If you don't truly believe that you're optimizing for the best thing for you long term, every decision is going to feel very dramatic, very exhausting, right? Every swing is going to be super high, and every punch or drawdown is going to make you feel super low. And those extremes, they don't create very consistent traders, and they definitely don't create very profitable traders. Kind of is a great one in The Office, right? Where one of the guys on Daryl's team, he's talking about how he was a surgeon in Japan and how he had the steadiest hand, right? And that's what made him so good as a trader, or as a surgeon. In trading, it's very much the same for us here, right? Where we want to have that very stable psychological framework in place. And the more stable it can be, the easier it is for us to have that sort of consistent execution, or that nice boundary, right, that we can work within. So then let's talk about like math probabilities, right? There's a section on the DTR website that kind of shows you your odds, or your percentage of having a significant period of drawdown. You go into the statistics tab, right? And you go into your risk drawdown. There shows you the probability of like how many losses in a row you're likely going to take, right? So if you have right now I have a 55% win rate, the odds of me taking 3 losses in a row are approximately like 10%, right? So it's 9.57%. So that means that in every 10 trade sample, right? Or in every, 100 trade sample, there's, probably 10 trades in there, or 10 times where I had an opportunity where it was very likely for me to lose 3 times in a row. That's a pretty big amount, right? You can scale that up to any scale that you're really interested in, but fundamentally, you're always within that striking distance. And obviously, the lower and lower your win rate goes, the probability, right, of having consecutive losses increases and increases. So for every 10 trades, right, there's, a 10% chance that I'm going to have 3 losers in a row. And that's a pretty big number. So, got to be very conscious, right, of what that math actually means. From there, it's about pairing our math, right, to our psychology. So again, going back to having those realistic expectations. If I know that a, probability event of me having 3 in a row, or 4 in a row, or 5 in a row is XYZ, and I don't want that to happen, well, I can't really prevent the 5 from happening. That's just going to happen over the course of a trading career. What I can do, though, is size my position so that when a worst case scenario happens, or, that 1 in 50 event happens, or that, 1 in 100 event happens, that I'm okay, right? You're going to have 2 1 in 100 events every year. You're going to have, 3, maybe 4, sometimes maybe 5 1 in 50 events. So there's a lot of opportunity for these things to kind of bite you in the ass if you're not really paying attention to them. and attacking them proactively can really set that foundation to managing your psychology well in that moment. Now, the hard thing about being a systematic trader is that the number one rule of systematic trading is that you don't break your rules. Now, I've been trading this technique for a very long time now, right? It's effectively been this exact same technique since like August, right? With the fake out entry technique and things like that. And that means that one day or one trade or two bad days or hell, even a bad week wouldn't be enough data for me to want to change everything that I've worked so hard to create over that, let's call it 7-month period at this point. So I can't overreact to a losing trade. Now, what's the easiest way to avoid overreacting to a losing trade? Well, you size your positions, right? And we go back to that proactive framework we just discussed, where, hitting that number stings, but it doesn't destroy you. And that's the kind of the fine line or the balance we kind of want to straddle. So once we've established those, like, say proactive choices, right? And we are understanding that the number one rule of systematic trading is that you don't break your rules. The only thing we can do is continue trading our system, studying from our trades, improving our technique, and focusing on the variables we can control. We don't need to switch strategies. We don't need to switch position sizing. We don't need to switch entry techniques. We need to focus on making sure that the blip in our trading is an anomaly and it isn't the, call it like spiral or the banana peel or however you want to describe it, that makes you slip up and give back even more progress. So being very proactive, right, allows us to size positions where maintaining that systematic discipline becomes not easy, but it becomes tolerable. And once we get to that position, it's a lot easier or a lot simpler psychologically for us to gamify progression when our objectives kind of have those longer time frames. And then inside each individual trading day, I want to be reframing my approach. So instead of thinking, how much money am I going to make today? Or, okay, fuck, I need to do this so I get out of my losing streak. Like, not allowing those intrusive negative thoughts to control me, and instead putting all my energy into finding one thing that I can learn and one thing that I can improve. If I can take something that I learned and can focus on that, and even if it cost me money, that's a good lesson, right? Like, I'm willing to pay for the market to tutor me in that way. But if I'm not willing to learn from that mistake and I'm willing to do that mistake over and over again, I don't want things to turn into a toll booth. So finding that routine to really focus on short-term process creates long-term goal, and long-term goal allows us to reframe objectives so that we can control expectations and manage probabilities better in the moment. And yeah, like, every trader is going to have periods where they get their butt kicked. Every trader is going to have periods where they absolutely rock the show. And they're like, it's really up to you on how long you let those patterns interrupt you or control you or dictate you. But you want to be the trader who's in control of their emotions, not controlled by their emotions. And I think, in drawdown or in periods of, let's say, significant losing, it's really hard to flip that switch. So we've got to attack those issues from a proactive perspective, bring that calm energy, right? Be that person who knocks and focus on finding ways and getting better. And the only person who has answers to those questions is you in your trading, right? Listening to what your gut feeling is telling you. Listen to what your first thought is, test it, see if that's actually the problem, then progress, move on, and improve. So I think that's the key to managing let's call it a positive trading psychology during periods of drawdown or losing. And the number one objective is to basically elongate your framework for your goals to gamify your process in between, and to understand the mathematical probability of your trading. Once you understand those basics, it's then about adjusting your behavior to make sure that those outlier events, right? Those 1 in 50s, those 1 in 100s, those 1 in 25s, whatever they might be, don't put you into a state of panic, and you're able to maintain control over yourself, your psychology, and most importantly, your trading account. Any questions there, team? How's everyone feeling after that one? It's tough sometimes, Shirley, because we have to trust that the hard work will create the evidence that we're looking for, right? The evidence doesn't show up and then we start working hard. We have to work hard and then basically create that evidence. Right? And that's what's really frustrating about it, because like, yeah, it is like you pay a tuition to the market, right? And I think no matter what, like no matter what business you choose to participate in, you're going to have some form of expenses. Like there's no business that runs at 100% margins. I mean, good for you if you can. But there's always expenses, right? So even trading has that, right? And your losses are just a part of your expenses. They don't have to be anything more than that. And the more deliberately we describe them in like gentle terms, the easier it is for us to kind of like store them and not be bothered, right? Like, I don't know if I'd ever would have been able to get away with this, but if I called every loss a Princess Fairy Rainbow, you know, I probably feel a lot more calm and gentle about how I felt after losing 500 Princess Rainbow Fairies or whatever it was, right? So the language you use to describe your problems very much become like the battle you have between your ears. And so when we choose that language deliberately, it's a lot easier to win that battle consistently. You know what I mean there? And that calm energy, that's not something I'm always very good at. There's yeah, there's a fine line there. Because intensity, I think trading requires intensity, but it requires, yeah, control. And those are adjectives that are a little bit at odds with each other. Who's got some questions for me? Anything you guys want to go over? Anything you guys are stuck on? How can I maybe help you work through some of your stuff? I've had a question for you. When you're at all-time highs, do you consider that as a possible reversal maybe, or in the strategy, or no? Like being at all-time highs itself, I have no reason to be fundamentally bearish, right? Because if you're a bull, that means everyone who's long is profitable. Not a single person has any incentive to sell. So fundamentally, like just being at that price level wouldn't be enough for me to be interested in a reversal thesis. I would need to get some sort of indication that bulls are either exhausted, right, and they've run out of juice and they've taken a lot of profit off or whatever, or that bears have clearly reclaimed control and it was like a mirage of strength. So I would use candlesticks and volume to confirm that narrative, right? Using kind of strong candle patterns or candle shapes, right? Like full body bearish, second most bearish, normal body bearish candles with increasing outlier volume. If we can get that combo to sync up, that would give me a lot of conviction that, hey, maybe this trend is reversed. But just being at all-time highs, not enough for me to be interested, and buys would be to the upside. And even like if I was to trade to the upside, right? Like I wouldn't just blindly trade it because it broke out through all-time highs. I would need the same standard we set for the bearish candle, right? Except it would be the opposite. So I need to see momentum show up. I would need to see that strength in numbers that we talked about. If I'm expecting there to be no reason for anyone to be bearish, why wouldn't people be loading up there? So I should be able to see those buyers effectively join the price action. And if I can get confirmation of those narratives, again, using candlesticks and volume, then I'll know. So price being at all-time highs is just effectively a setup trigger. It's a reason for me to refine my focus and start paying attention, but it's not nearly enough information for me to be interested in making a decision quite yet. And that scales down to any time frame or basically any strategy, right? So when I'm trading the opening range breakout and I'm looking for a move on like the 5-minute time frame, my setup only becomes active once we get a breakout through, right? Or a breakout through a high a day or whatever it might be. The setup isn't enough for me to take the trade. I still need the confirmation requirements to all sync up. And then I need my execution rules to be basically neat and tidy, right? If I can get all those things, right, I can get all three of those wishing stars to all tell me the same story, then yeah, it should be a really good opportunity for me to justify taking some risk. Otherwise, it's not worth the time, effort, or energy. Yeah, volume is these big bars underneath my screen here. This indicator right there. Who else got some questions here? What do we got for me today, team? How did everyone's trading day go today? So still working on fixing a lot of like the ghost account issues. We are kind of rolling out like a rolling fix path here for people, but we'll be we'll let everyone know when it is fixed and resolved. Effectively, what happened here? We're just fixing too many people's issues one by one instead of fixing the base code. And so there's just a lot of weird stuff that's kind of fighting each other that needs to be cleaned up to make sure everyone's account state maintains its structure. So we're working on it, guys. Like it's basically my nonstop. I've been at it nonstop here, so we'll make sure to get there as much as possible. And so just fixing them is important. So goal here is, hopefully tonight, not too late of a night, but hopefully everything is really stable and functional, and we'll make sure everyone's accounts and everything that's restored to their proper balance if impacted. So correct, Coley, your interpretation of the intraday is spot on. Once you clear past that buffer, your drawdown figure locks. So even if you take a payout, your drawdown figure remains locked. Like if you have a 45 or a 150K account, you'll always have $4,500 of drawdown as a minimum. So here's a good question. When we have the initial 10-point stop zone, I don't understand when you say if it goes within that 10-point zone, you're getting in at a discount, but the probability of getting stopped out increases. So, yes, but the tighter my risk is, right, the less of a move I need for it to be profitable. And so my risk reward also increases, or my effective risk reward also increases on each trade, right? So if now on trades where I even buy like a 20% discount, assuming nothing else changes, I've got 20% better entry and a 20% better exit. I've effectively added 40% to my position by just buying that little discount. So even though I might have a probability of getting stopped out a little bit more often, I would challenge you on that, right? I would say that you probably don't have the evidence to back that up. I'd say that's probably like a gut feel or like intuition. Yeah, like for me, when I'm entering a trade, I'm not thinking, okay, how can I enter it so I don't miss this position? I'm thinking, how can I enter this so I maximize my potential of being profitable after like 1,000 trades, right? So that's like where I'm optimizing for. So if even my win rate gets worse, but my average win is now 40% bigger, and I have way more follow through, and I have those bigger opportunities, that opens up a lot more for me. And you know what? Like, so my win rate's 55% on the year. So, you know, I'm taking like 4 or 5 trades a day. So, like, I'm going to get stopped out a ton. Why not try to make that as small as possible? It's still going to be effectively the same. Now, if I was like trying to buy it within 1 or 2 points of the stop loss, then for sure, like then I'm going to struggle because the slippage is just going to shake me out way too often, and I'm creating a pretty, I don't know, just unnecessary trauma. But nah, like all things considered, I don't really have any evidence that, you know, buying 2 points or 10 points, or like, you know, buying 8 points or 10 points, it really changes my win rate that much. Nice work, Andrew. That's awesome. It's kind of like that thesis we talked about, right? Where you build confidence in your trading by making mistakes, surviving them, and then getting back to all-time highs, right? So it's like proving to yourself or creating that feedback loop that, okay, making mistakes happen, they're fine, but I can fix them or I can get over them when the time is right. And that's very much what it sounds like you did. So fantastic. I mean, your balance should be shown in your trading tab at all time. So fully right, I would say that your instinct is to close as P&L is increasing, which is correct, right? But a trailing stop loss doesn't do that, right? A trailing stop loss means that you're literally closing as prices pulling away from the highs. So your thesis is correct. And so what my argument to you would be, right, is when you feel like it's time to protect your trade and you want to set your trailing stop, that's the time where you take your profit off the table, right? Where you close the entire trade. Why wait to give back an extra 10 points for it to stop you out and give back your drawdown too? So for me, that instinct, it's kind of, you have both you have like the right instinct of what you should do, right, where you finish that statement off with closes P&L is increasing, but your action or your execution of that action is incorrect, right? So like setting that trailing stop loss will fundamentally mean you're not closing as P&L is increasing, means you're closing as your P&L has dropped significantly. You know, 1R move, like $500 worth of risk. So you're effectively giving away a significant portion of your P&L with that type of decision. So it's better to close it. If the trade keeps running, tough shit, so be it. Like profitable traders are always leaving money on the table. That's why they're profitable. They're closing their trades before the market turns against them. And as you build up that confidence and as you build up that muscle memory of closing as P&L is increasing, you'll find that that period where you feel like you need to protect will go higher and higher. Right? So your instinct is correct in that moment, right? But your technique doesn't actually match what you're trying to execute with your instinct. Right? So you get those things to sync up and you'll see a very big difference. Like the difference, guys, between being a trader whose average win is 15 points and 10 points is literally millions of dollars. Love that, Ken. That's amazing. What a testament. Average win's almost 3 times bigger than your average loss. Basically means your win rate's irrelevant. So then clean up a few of those trades. You push that win rate to 50-50, and dude, you're flying. So that's fantastic feedback. Thank you for sharing that. What else we got here, team? What are the questions we got for this evening? It should just be on your dashboard, right? In the DTR hub or on the Day Trader Funding website. So what's confusing about it, Shirley? Or what's what's stinging you? No, right? It's where you close your trade based on what the peak equity of that position was, right? What we're trying to avoid is like people who are effectively like averaging down into positions or taking like really aggressive risks to try to clear that buffer as quickly as possible. So if you just trade normally, the intraday buffer won't be an issue for you whatsoever. It's just that when you start to do like hacky things or you start panic trading, right? Or you start doing things that aren't necessarily supported by good technique, you're not going to be able to pass through that function. So I would say that that depends on each individual user and what your budget is for evaluation accounts effectively, right? The more aggressive you're going to be with your risk, the faster you'll pass evals and the bigger payouts you're going to get. But you're also going to fail more evals and you're going to fail more funded accounts. So there's a different risk reward equation for everybody. I think as a starting point, the 1% per day is a really good number. As you build up your buffer or as you build up your drawdown, you should be able to get larger sizing than that. And that'll make it really easy for you to then scale up. Your first goal with these funded accounts is to basically survive and to create like 10% of space for yourself. Once you have that, things kind of smooth out pretty quickly and you're able to take those bigger risks. But it's in the same way where if you were trading with a small account, you'd want to build up your sizing before going full port. Kind of the same thing here, right? With these prop firms, you want to build up that buffer before you increase your risk because your number one indicator of success is basically how long you keep access to that account for, not how big you trade each day. Yeah, so that means, Shirley, right, that in one of your trades, you were up like $500 and you didn't take that win. So then your drawdown was calculated from the high watermark of the trade that you were profitable on, but didn't take the trade, like, or didn't take the P&L on, right? What are the questions we have here this evening, team? I mean, if you want to do that, fire away. In my own personal studies, I haven't found that to be like particularly more profitable. Um, I just end up getting stopped out a lot on that one break even contract, like a tremendous amount. But it's kind of the same thing we talked about with buying those discounts. If you can get one or two to really pay off or hit for you, amazing. But there is no right or wrong answer there. If that's something you want to try, perfect thing to test for a couple weeks, right? How often did you leave one? How often did it end up running further? How often did you have an actual plan on where you were going to eventually close it, right? Things like that. And then you can really attack that from a factual perspective. Truth be told, I haven't done that analysis on my own trading for about a year and a half at this point. So I don't necessarily have the most up-to-date information on if it would be successful or not. But I've also felt like if I'm looking at my trading from like the last like 6 months, gotten more than enough like really good sized wins and net sized wins. So for me, I'm more concerned about getting large position sizing with tight risk. And that I think helps me avoid the need to like want to hold on to runners. And if I get like a 65-point move or a 100-point move, I don't know, how much more do I really need to squeeze out of that to be happy? Probably not that much. So, um, yeah, it's hard to find that balance, but if you can find it and you can prove that it's profitable, absolutely, why not? I mean, realistically, Leonard, it will be cheaper long term for you to go with the DTR, right? Path, cheaper resets, 80% off. So it's a much, yeah, I mean, long term, it will be more effective. Now, if you have a history with the platform and you're used to it and, you're happy with how things have gone prior to this reset, there's also no reason to change. There's no right or wrong answer, um, but up to you. Like as much as I appreciate everyone's business with the DTR prop firm, you guys like you should also still diversify, right, and have other accounts and exposure with other companies. You don't need to limit your leverage to here. Now, we'll try to be able to increase everyone's account sizing soon enough and get everyone to be able to trade more than 5 accounts. But um, yeah, it's always worth having multiple sources of income. What else you got here today, team? Any other questions? Any other trading questions? Anything about my technique? Any psychology stuff or risk management things you guys want to go over? Even just a topic maybe you'd like a little rant or rave on? Be happy to try to fill some gaps here. It'll cost you, depends on the account size, but it'll cost you like $79 to reset, but it'll reset back to your evaluation, not back to your funded. We don't offer that path at the moment. So for me, I trade the opening range breakout using candlesticks and volume as confirmation. My setup triggers are a high vol breakout from the opening range, which on my screen is the blue box, or a breakout through high of day or low of day. And then my alternative setups, right, would be mean reversion looks, and those would be reversals off of or near those red lines. And then again, using candlesticks and volume to confirm those narratives. If you get to live, so you get the direct live capital, there might be a different path, but we don't offer like the $1,500 reset that Take Profit Trader offers to reset your funded account. I mean, same thing we kind of talked about earlier here, Shirley, right? Where I manage my expectations by having my goals being long-term goals, right? So if I miss a trade, but I'm looking at my trading progress over the course of the next 365 days, why do I care? Right? Like, why would I care? So that would be the mindset approach, right? It's kind of judging yourself on a longer time frame where singular data points become insignificant. Don't have anyone trading live capital yet. We're still pretty early. I would think that that's probably still 3 or 4 months away. No, it's all good. It's just these concepts, they rhyme and repeat, right? So like building that solid foundation and like creating that expectation, it doesn't just impact one thing. It impacts a huge cohort of them. Oh yeah, surely I would love you to be one too. Have one here, right? That's the whole objective. And once you're consistent and you're profitable, it's way better for you to be live in the market because then the market pays for your profits, right? So it's like, we're all incentivized by the same thing. If my business only runs like a casino, then when Shirley's like a killer trader and her 5 accounts or her 5 accounts, keep that secret between us, Shirley. Those 5 accounts are working as expected and they're humming along. Why wouldn't I want you live in the market? I'll make more money, right? So that's the whole objective, is to get you to a point where our incentives are 100% aligned, and they should be at all times. But being able to grow that unrestricted, no rules, the way it should be. And so helping people get to that point is going to be a lot of fun. Old school trading desk style. Yeah, aren't we all? I'm still working on consistency too. I wish I could be as calm as a cucumber and as gentle as a puppy, but man, we all got work to do always. What are the questions we got here this evening, team? Any other topics you want to go over, or any other concepts maybe that you want some clarity on? What do we got here? I always think of price action as like two kids in the principal's office, right? Where generally one kid's going to tell you one story and one kid's going to tell you the other. And it's the principal's job to figure out which one's telling the truth or where the truth is. But if every kid just came in and told the same story, pretty easy for the principal. And so the more consistent the narrative is, the easier it is for me to trust the story. I would say most of the time I'm trading on like the 2 or the 3 min time frame, but the time frame itself, I'm not too fussed about. Well, I guess like where I would challenge you, Brian, right, is what's the difference between a bounce and a separation? A lot of what I try to do on a daily basis when I'm discussing setups is to simplify my language and to hopefully try to make it more consistent. Sometimes the term bounce doesn't necessarily come off as very objective, and that can be a bit misleading maybe sometimes. So yeah, I don't think I did it or turned it off consciously, like nothing like that. But yeah, try to keep my language very consistent and simple when I'm trying to describe my trading, and try to remove adjectives that maybe encourage more aggressive behaviors. Right? Like, so I think a lot of people would find the term bouncy or it's bouncing here or whatever to actually maybe be like a nerve wracking adjective versus one that creates the confidence that I was maybe looking to describe when I used it. The whole point, though, of how price action pulls back into my zone is actually tracking the speed of it, right? Or the intensity of it, or whatever it is. It's very hard to do from like a mechanical perspective. Like I can't really keep track of, okay, this trade moved 3 points in a third of a second today, but yesterday it did 4 points in a third of a second. Like I can't do that. I don't think any human can. So the reaction then becomes, right, is did this price action create an emotional reaction for me or did it not? If it didn't, that's going to be a positive reason to enter that trade. If it did, then it's a reason why I want to avoid. And so I want to use language that doesn't trigger an emotional response in myself or others so that I can look basically at like the first principles feeling. And that shouldn't necessarily be impacted by the actual speed of the move higher or lower or into my zone or not. That's more dictated or influenced by the completeness of my plan and how thorough I was in my preparation of it. So, like, the more of those variables that I expect or accept and take ownership over, the easier it is for me to maintain that calm and cool approach. It's not necessarily a feeling, it's not trading when I feel a negative sensation, right? So if I can avoid taking trades where I trigger the greed muscle or the fear muscle or the anxiety muscle or whatever it is, then I'm likely to not compound mistakes, right? But if I enter a trade because I'm feeling greedy or I trigger, price actually makes me feel that for whatever reason in the moment, then when it's time to take profit, I'm probably going to talk myself into holding that trade for longer, give back a ton of P&L, maybe even go red on that position, and just do a dumb mistake that I don't want to do. So the more of a calm mindset that I can approach it from, the better, right? And then that also places a little bit of accountability to each individual person, because everyone's going to have a different calm, and there's not a right or wrong answer. It's just about forcing yourself to be or maintaining control when you're likely to make a decision or to compound a decision that would create a lack of control. So that's really all it is, right? It's a proactive approach to managing my psychology more than it is anything else. Any other questions here, team? I'm going to go final call for questions. Then the third or fourth call for them. So maybe you guys are running out of steam a little bit here. The range is calculated off of the first candle of the day, right? So based off of the highs and lows of the first candle of the day, on whatever time frame that is, right? So the first 5-minute candle would be from 9:30 to 9:35. On the 2-minute would be from 9:30 to 9:32. So whatever the highs and lows of that time frame are, that would be my opening range. And those times were Eastern, right? An Eastern time zone. Okay, team, final call here. Final call. All right, team. Well, if no further questions, then I'm going to kill it here for this evening. Tomorrow, just really depends, guys, on how long these tech issues continue to keep me up here this evening. If I can get to bed at a reasonable hour, then yeah, we'll be back at it again tomorrow. If not, I really just need to fix these before it drives everyone insane here. So please bear with me. I'll do my very best. But yeah, hopefully we'll be back at it tomorrow. All right, guys. We'll see you then.